Jai Hind friends, warm welcome to our YouTube channel. ITR means income tax return. After the year end, you have to file a form which can be ITR 1, 2, 3, 4 and in which you have to mention all sources of income to income tax department. If is there any tax need to be paid, you have to pay accordingly. So in today's video, we are going to discuss your 2026 year going to start. In 2026, who are required to file their ITR mandatorily? We will discuss the list, we will discuss the person, we will discuss the income or threshold limit. After crossing that, who is required to pay income tax return in 2026. If you found this video helpful, so without further delay, just jump into the video and let's discuss who are required to file their ITR income tax return in 2026.
So friends, your calendar year 2026 has been started. Now we are going to discuss income tax return, means ITR filing mandatory, 26 conditions where you have to file your ITR in respective of your income. So before checking these limit, you need to confirm, you need to check that which type of income you can earn. So there are 5 head of income you can earn. First is salary income. Pension income is also considered as salary income. Second is PGBP, profit and gain from business and profession. If you are selling something, if you are providing any services. House, property, if you are having any residential, commercial, rental income. Capital gain from share market, from mutual fund, from property. And fifth, which is not falling in 4 of the head, the income come in the 5th one, like interest from saving bank, FD, RD, any part-time income. So if you are going to file your ITR, you have to select correct and exact ITR form, like ITR 1, 2, 3, 4 and 5, 6, 7 will not be applicable to an individual. So you have to select from ITR 1 to 4. And nature of income is very important. There is 3 type of income you can consider. One is normal income, like your salary, rent, business or part-time income. Second is special rate income, which is long-term capital gain or short-term capital gain from shares. Third is super special income, which is virtual digital assets, means cryptocurrency. There is 30% flat tax payable on it. So according to your nature of income, you have to decide your taxable income and your tax-free income and your tax rates. Now important part, from 1st January 2026, your calendar year 2026 started, but income tax or GST work on financial year wise from 1st April 2025 to 31st March 2026, financial year 25-26, assessment year 26-27. So from 1st January 2026, your calendar year started. So all the limits we will discuss according to your financial year 25-26. So before discussing the mandatory limits or criteria, if you are filing your income tax return, so it is very beneficial or helpful for you if you are going to take any kind of loan, like home loan, vehicle loan, any type of loan. If you are applying for credit card, if you want to go abroad for any visa purpose, if you want high coverage in your term insurance, if you want to claim your TDS which has been deducted, if you want to create your own record capital proof of income, if you have incurred any loss, then you want to carry forward that losses, and if you have do unnecessary transactions and many data showing in your AIS, TIS and form 26AS, then after filing ITR you can save yourself from income tax notice as well. So first limit for ITR filing, there are 2 type of tax regime. Friends, if you have opted for old tax regime where deductions and exemptions available, ITR filing mandatory if gross total income, means income from all of the 5 head cross basic exemption limit, and basic exemption limit is 2,50,000 rupees for age up to 59 year of person. If your age is more than 60 and up to 79, then limit is 3 lakh rupees, and the person who are above 80 years which are super senior citizen, the limit is 5 lakh rupees. But if you have selected old tax regime, then if your TDS has been deducted or not, if your tax payable or not, if your income cross these limits, then you have to file ITR mandatorily. So for check this limit, you need to check gross total income before any deductions. For example, if your income is 3,50,000 rupees and your ATC deduction is 1,50,000 rupees, so your taxable income become 2 lakh rupees, but your gross total income is 3,50,000 rupees, which is 2,50,000 rupees, then your ITR filing become mandatory. Second condition, your second option, if you are opting for new tax regime, so there is no age bar for all the age group person if your income cross 4 lakh rupees. Sir, we have here there is no tax up to 12 lakh rupees. You heard correct, but tax payable limit is different and ITR filing limit is different. So if your income cross 4 lakh rupees, then ITR filing become mandatory if you are choosing new tax regime. If your TDS has been deducted, suppose you are getting any salary income, you got any any professional fees up to 10 lakh rupees. So 1 lakh TDS has been deducted. So TDS deducted, advance tax paid. Even in old tax regime, there is no tax up to 5 lakh rupees. In new tax regime, there is no tax up to 12 lakh rupees. But your gross total income exceed basic exemption limit, which is 2,50,000 rupees in old tax regime, 4 lakh rupees in new tax regime. So ITR filing become mandatory. So make sure to file your ITR. One more condition: if TDS has been deducted and you want to claim that refund, as I told you, in 10 lakh rupees income, 1 lakh TDS has been deducted, but there is no tax up to 12 lakh rupees. So if you want to take this TDS refund in your bank account, then ITR filing mandatory, and make sure you need to show all the income which is showing in your 26 AS, AIS and TIS, and you have to show them in income tax return. Friends, if you are doing any job, if you are doing any business, so for trying your luck or for your investment purpose, you are doing trading or investing, so it is always advisable to file your ITR. If you did huge stock market transactions, sometimes people do lakhs in crores of transactions in intraday F&O, because all the data are reportable and online. Suppose you only do have only 1 lakh rupees, but you did transactions again and again and again, so income tax department might consider you have that much amount. So always file your ITR if you are doing share market transactions. If you have any special income like gambling income, casual income, horse riding, nowadays Dream 11 Rummy has been banned already, but still if you have any income, if you have TDS has been deducted, still you have to pay 4% health and education cess. You might be pay surcharge if your income cross 50 lakh rupees. So if you have any special rate income, always try to file your ITR. In the world of cryptocurrency, if you are doing VDA, means virtual digital assets, so these are reportable transactions by exchange, by P2P, or TDS will be deducted at the rate 1%. So if you have not filed your ITR properly, you might receive notice under section 143(2). If you have not filed your ITR under section 148, under section 133(6). So always make sure to file your ITR if you are doing cryptocurrency transaction. If you are residing out of India more than 182 days, so you become NRI. So in India, if you are NRI or you are having any assessed, any signing authority, any banking transactions out of India, beneficiary of any assessed, so ITR must be filed by yourself. But if your normal rate of income is up to 4 lakh rupees, then ITR filing not mandatory. If you have any special rate income like long term, short term, capital gain, cryptocurrency, gaming, then 4 lakh limit will not be available for you. ITR filing become mandatory. If you are a foreign traveler, if you frequent travel and you have spent more than 2 lakh rupees in a financial year on yourself or any person on your behalf, so irrespective of your income, you need to file your ITR mandatorily. In India, in every home, in every shop, you may find electricity bill, electricity meter. So in one financial year, if you incurred more than 1 lakh rupees electricity bill, but nowadays in India, you cannot find the proper owner by the bill. There is no proper KYC. So it might be in future, it may get corrected. So if your electricity bill in one financial year more than 1 lakh rupees, then ITR filing become mandatory. Friends, if your age is less than 60 years and your TDS has been deducted amount rupees 25 or more than that, so if your TDS is refundable or not, your tax is payable or not, but ITR filing become mandatory. If your age is more than 60 lakh rupees, then your TDS has been deducted 50,000 or more, so you still need to file your ITR mandatorily. In India, every person have saving bank account, not only 1, 2, 3, 5, 10 saving account in government bank, private bank, small finance bank, post office, payments bank. So in one financial year, if you deposit in one or more saving bank account 50 lakh rupees, so ITR filing mandatory irrespective of your income. So that deposit might be cash, UPI, online, and also you need to keep GST registration limit in your mind. If your sale cross 40 lakh rupees, if your service cross 20 lakh rupees, then ITR filing become mandatory. As well as in current account, if in one financial year you deposited in one or more current account more than 1 crore rupees, then ITR filing mandatory. It might be from cash, UPI, online, and GST registration limit also should be keep in mind. If you are a businessman, you are manufacturing something, you are a wholesaler, you are a retailer, you are a distributor in one financial year, if your turnover cross 60 lakh rupees, then ITR filing mandatory. Suppose your turnover is in cash and you have to declare at least 8% of net profit, which become 4,80,000 rupees. So ITR filing mandatory if your income cross 4 lakh rupees. So always keep GST registration in mind and you need to declare at least 8 or 6% net profit. So ITR filing become mandatory if your total receipt from business cross 60 lakh rupees. Same rules applicable in the professional. If you are doctor, engineer, lawyer, chartered accountant, your service receipt cross 10 lakh rupees, then ITR filing become mandatory irrespective of your income. Friends, any financial transactions if you are doing, so you must have submitted your PAN card. Every transactions did with your PAN card can be shown in AIS, TIS and 26AS. So it is always recommended if there is any reportable transactions, then you should file your ITR. Otherwise, you might receive notice up to 4 years if your transactions is up to 50 lakh rupees and up to 6 years if your transactions are more than 50 lakh rupees. Unfortunately, if you incurred any loss in any business, any share market transactions, then if you want to set off with another income or you want to carry forward for next years, then ITR filing become mandatory. If you have registered yourself in GST, so GST regular or composition, you must cross verify GST data, GST turnover with income tax turnover, so that you might not receive any notice in future. Any foreign assessed, any income, any bank account, any foreign share, ESOPs, crypto on foreign exchange, so ITR filing become mandatory for yourself. Friends, there are two tax regime. If you want to go in old tax regime, there are several deductions and exemptions from 80C to 80U, many exemptions like HRA. So if you want to take benefit of these deductions and exemptions, ITR filing become mandatory. If you are a company, might be public limited, private limited or one person company. If you are a partnership firm, if you are a LLP, if you are a trust, society, NGO, or ITR filing mandatory in all of the cases. Friends, if you are holding any position as a director in any company, if you are a partner in a partnership firm, if you are a partner in LLP, so ITR filing mandatory in your conditions. Friends, if a person is earning any job or salary income, he have some additional funds, so he have given the funds to his wife or his minor son. So what will happen? Any income earned from these funds will be included or clubbed with the person who have given the funds. So if clubbing of income applicable for minor child or wife's name investment, so they need to file in person's ITR. Friends, if you are doing unnecessary transactions and you must show at least certain percentage of net profit. If your all sales are in cash, then at least 8%. If your all sales are online, then at least 6%. If you are service provider, then at least 50% net profit need to be shown. So how you will show? After filing ITR. So if you are not falling in all of the 25 conditions, then you are still and you can file your ITR, then you may take lot of benefit which we have discussed already in the video. There are 30 plus benefit of ITR filing. So you must file your ITR before due date after 31st March 2026 when your financial year will end. So April, May, June, July, you will get 4 months. If you skip in these 4 months, then up to 31st December you can file your belated ITR. You can change or revise your ITR if already filed, or updated ITR you can file up to 4 years from the end of the assessment year. So friends, if you find this video useful, please hit the like button and please don't forget to subscribe us for upcoming informative videos. Please share it with the persons who do not want to file your ITR, who don't know the ITR filing limits and rules. Friends, if you have any doubt, query, questions, feel free to ask in comment box. If you need any professional help, you may call, message or WhatsApp us. Thank you so much for watching this video. Jai Hind, Jai Bharat.